Hello and welcome to the free DecisionPoint trading room here on StockCharts TV. My name is Erin Swenlin and I'm here with my father, Carl Swenlin, and we're here to get you all ready for the week. We're going to see what's going on in the market currently, give you our thoughts, and then of course at the end we will do a sector review and look at a few industry groups, and then we're going to go ahead and do your symbol requests. Q&A box is for your symbol requests and questions. The chat box is open, but it is just for you. So make sure that when you do send a comment in the chat box that you use the drop-down menu so that it goes to everybody. And let's see, we are not registered investment advisors, so all trading decisions are your own. Anything that you hear in this trading room, read in our blogs, particularly when you hear the buy points, sell points, buy signal, sell signal, don't mistake those for calls to action. They are really just mechanical signals, and that's where we're going to run from there. All right, I think we're about ready, Dad. I'm going to have you share your screen and get us started with the market overview.
Okay. And in case anybody's having trouble with the focus of the charts, it could be you're using a browser that's not performing that well. So change to another browser. Okay. The market on Friday, it broke down out of the falling flag formation, or reverse flag, I should say. And today it's gotten back up inside the flag. And it's actually popped outside of the descending wedge formation, which is what we expect to happen ultimately. On Friday, it didn't look like that was going to happen, but today, here we are, and it's been outside the top of that wedge today, but it's back trapped inside of it for now. We shouldn't be surprised that we've gotten this bounce so far. The sentiment indicators have been just hugely bearish, which means that's bullish for the market, and it's just been painfully so. And so this is not terribly off the wall at all. One of the things I should point out, S&P 500 total volume updates at the end of the day. So just keep that in mind when you're checking this out. Let's go to some indicators. Our short-term indicators, the Swenlin trading oscillator for breadth and volume. And they have been contracting for what? 3 days, the last 3 days of last week. Again, this is an end of day indicator, so we only you only see this posted after the close. But right now, I would expect that it's going to move higher if we close up today, for sure. Okay, I got that. I better try the arrow. Okay, here's the ITBM and ITVM. That's intermediate term indicators for breadth and volume, momentum. And they hit a new low on Friday, but they're very oversold, and not as oversold as it got back at the bottom of the 2020 bear market, but certainly enough to squeeze a bounce. And we could be ushering in a new rally today. Bear market rally, of course. Let's just look at the two together. They've both been very oversold, and so while the short-term indicators have already bottomed, they're still working in concert. If the intermediate-term indicators start moving up today, they'll be moving in concert with each other, so that, again, you've got short and intermediate term indicators working together to get us a rally. The US dollar is in decline slightly. Notice there was a short-term parabolic arc here. It broke down from that last week. And what we expect, this is short-term. It's not going to go any great distance. Certainly not based on this. We can't project any great distance downward. What we'd look for is we have a rising trend line here. We have horizontal support going across here. So that's a very likely area where it will find support and possibly bounce. Since the dollar is showing weakness, gold is doing great. It's up almost 2% today. Maybe this is the final low for the long decline. One of the things that I wanted to point out, let's go all the way to the weekly chart. Now, this is another end of day chart, as it shows there. And last week, we had a pretty terrible breakdown, but it's bounced back up to the support line. But it's still below this rising trend line, and it's below this horizontal support. That's not good. This would be the next support line. It's about 1575, we'll say 60, something like that. Oil is getting a nice bounce today. It's actually broken out of the declining wedge pattern and is above this line of resistance. Now it would be support. And apparently Saudi Arabia is going to, or OPEC is going to cut back on, is planning to cut back oil production more. So that makes the oil we've got more valuable. Treasuries, this is the 20-year. It is on a bounce since last week. But ultimately, I showed the long-term chart last week or week before, and it is entered its secular decline, and bonds are going to be declining for years. Obviously not all at once. Here we have the 10-year bond yield. Notice the rising trend line. Then we have the parabolic advance, breakdown. Now we're at the trend line, trying to hold on to that trend line. This is much better looking support right here, but again, when it gets steep, it's gonna correct. You just count on it, and we'll be looking for it to find support pretty quickly. Bitcoin is above this long-term support, and basing is all I could say right now. Utilities, the utility sector is one of the two sectors that has still got the 50 above the 200 EMA and still on a golden cross, but it's certainly looking bad. Today, it's got a heck of a rally, 3%. Apple has really fallen out of favor. It's got a nice 2% bounce today. We shall see how it proceeds. Let's look at some other big tech stocks. I think the these stocks are not going to be doing as well as they have in this decade. Adobe caught on support, but not very actively going higher. Amazon in a intermediate term and longer term declining tops and declining tops. Google getting a nice bounce today, but again, in the context of this about a month and a half decline. Meta, you'll always be Facebook to me, is holding on this support line here for very briefly. We don't know what's happening, of course, what will happen, but right now it's still got a falling PMO, and that needs to bottom before we can expect anything good. Microsoft also trying to bottom here, but really it hasn't yet. Netflix stuck in this trading range so far, at the top of it right now. NVIDIA, like most of the other ones, caught on some support, but it's at its decline lows right now. We're getting to where these charts, the all-time highs, and are going to be going off the edge, so it's going to be difficult to keep track of the total decline on them. Tesla's having a bad day, 8% down. And have I forgotten anything? Let me look at the questions here, see if there are any questions. We'll get to the, no questions, just symbols for you later.
How about Bitcoin? Did we look at that? I don't think we did.
Yeah, we did.
Oh, okay. My bad. I'm still trying to get used to my new screen. So I'm kind of doing some technicals in the background.
You have to turn your head to see all of it, right?
Yes. Okay. I will grab the screen and we'll start looking at some sectors. We're making some really great time. So we should have plenty of time for some symbol requests. All right. I'm still getting used to this, so bear with me. All right. So you can see my screen, right, Dad?
I do.
All right, and it's working, yay. Okay, so right now I have a candle glance up of all of the sectors. It's a great way to really give us a sense of what's going on in the market across the board. And one of the things that I've been noticing, and I'm sure you've been noticing, Dad, is the fact that all of the sectors have really been carrying negative momentum. And there really hasn't been any sectors, there haven't been any that really have escaped this. So we've been watching just to see, well, where is that rising momentum going to start and where are we looking at? The other thing you should look at when you're visualizing all of our charts is where those EMAs are set up. And you can see that the majority of the sectors have price well below their 20 and 50 and 200-day EMAs. The only ones that are still, as you were talking about, Dad, on a golden cross, meaning they have a 50 above the 200. Right now, the only two that are like that would be utilities and energy. And really, part of that reason is that both of them, they did have some declines, but they were manageable for those sectors. And they were able to keep their configuration in a bull market sort of configuration for each of them. Of course, looking at utilities, I wouldn't call it a bull market. And, energy has been overall kind of moving sideways. I mean, it doesn't feel that way. But really, when you look at this chart, the 200-day EMA has been providing some sort of support here. And, but overall, we're kind of in this trading range for the last 6 to 8 months.
The sector's up today.
Yes.
As I said, it's hard to see on that chart.
Yes. So if you go to the dashboard, I probably should have started here. But if you look at what's going on in the sectors today, everybody except for discretionary are in the green. Discretionary has been holding a spot near the top for quite some time. So we're seeing discretionary now, that very aggressive sector at the bottom. What's really interesting are the three sectors that are above it right now. And all three of these are considered defensive in nature. I don't know that I would call healthcare necessarily defensive now. We have so many biotechs that are in it that kind of, move the volatility around a little bit more, but defensive sectors holding the majority of the bottom today on the scoreboard. So this gives us a sense that, okay, if we're going to have that move to the upside, as we're starting to see, maybe that's going to really be led by some of these more aggressive sectors. But then you go back up to the top here and you have energy, materials, utilities, which is a well-known defensive sector, and they're still moving here near the top. So we'll be watching very closely for technology, financials, comm services. Those are the areas we're going to want to watch if we continue and see some follow through on today's rally. Now back over to the candle glance. So we've seen the configuration of the EMAs now. We know that energy and utilities have the better setup for their EMAs. But what about rising momentum? Right now, you can see that going on in energy, and you can see that going on materials. Utilities, no such luck. I mean, this has been a dastardly decline for utilities. I'm so thankful I got out before things got really ugly here. But you could see that double top. It fulfilled, it confirmed, and then it moved to its minimum downside target, which was right about here. But then it broke down below that. As far as rising momentum elsewhere, looks like real estate might be showing a little bit of rising momentum. We'll take a closer peek at that chart. And a little bit here for financials. I'm not really seeing the same kind of move on the PMO on these others. Maybe technology is tipping up just a little. But let's go ahead and dive into some of these sectors. I want to start with energy. I know we talk energy all of the time, but I think it's important to look at it, especially now when we have this gap up. I've been telling subscribers when I think it's been diamonds, and I don't know if I've been doing it on our DP alert, but what I've been paying attention to and what I talked about Friday in my trading room for DecisionPoint Diamond subscribers only was that we were looking at a possible reverse island coming together here on energy. The problem with reverse islands is that you don't know that that's what they are until that's what they are. So they're not always that helpful, but you can at least get a sense that maybe you're going to see that pop to the upside, another gap, and then a move to the upside here. So that forms this little island down here of price. So we've got that pop, we got the gap, we're seeing prices rise above that 20-day moving average, and we've got a PMO that's turning up. This is looking really good for energy right now. And we looked at the crude oil chart. We're seeing a little bit of positive notes on that chart. In fact, I'm just going to bring it up here because I think it's important to make a comparison between the sector and what's going on here. And I will tell you that in the energy sector, one of the things that obviously crude oil we know is going to have some influence, but one of the things you may not know is that right now coal has started to make a move, and that is part of energy as well. So energy isn't just USO and crude oil. But you can see we talked about that breakout, but overall oil just hasn't been doing that well. And consequently, that's really put some major pressure here on the sector, the energy sector. So let's go back here. So you can see kind of a similar look, but not really. We've had that declining trend. Now, what we like to do when we go through our sectors is to look what I call under the hood. And what you can see are these participation indicators and the silver and golden cross indexes, which are exclusively ours, rather new. And very powerful. So what we look for are how many stocks are above their 20, 50, and 200. And then this kind of aggregates that data. It tells us, okay, Golden Cross, you are probably familiar with that, a 50-day moving average moving above the 200. Well, this tells us the Golden Cross Index, how many stocks are actually on that Golden Cross. So we know that there's a certain amount of stocks above their 20, 50, and 200, but this kind of opens up the picture a little bit more. And as you can see, it's actually a pretty high percentage here for the energy sector on that Golden Cross Index. Makes sense, right? Because when you look at the sector chart, you have to imagine that most of the stocks within that sector are going to look very similar. And so you can see that the first thing we're going to be looking for is, well, first of all, we have all those 50s above their 200. So that's why we have a Golden Cross that actually has a very bullish percentage. The Silver Cross Index tells us how many stocks have their 20 above their 50. So a Golden Cross 50-200, Silver Cross 20-50. So you can see that that has been in decline. So a lot of stocks have been having these dark crosses that have put the 20-day below its 50-day EMA. And so now we only have 14% that are holding a 20 above their 50. That looks like it's going to start improving. I imagine when we get the data for what's going on under the hood today, that this number, the amount of stocks above their 20 and possibly above their 50 are going to jump by quite a bit, because that's what we're seeing here on the energy sector itself, a big jump above the 20-day EMA. And for those stocks within that are configured a little bit more positively than the sector chart, that's where you're going to see some of these prices get above the 50. So all of these things are what we're looking for in a sector that we want to invest in, a sector that we're expecting to move higher. I think energy is looking pretty good right now, but I do caveat that it still is under that influence of oil. And right now things are looking pretty good for oil, but we know that that can switch pretty quickly. I will show you the coal chart, but let's get through some of these sector charts first. So the other one I wanted to
say, Erin.
Yes.
Yeah, winter's coming. I just can't see how energy is going to keep falling. I just don't see that.
I know, it just doesn't make sense if that were the case. And coal, honestly, would make a lot of sense too, seeing that moving up right now as we do get ready to move into the winter. It's going to be interesting to see how the hurricane ends up affecting some of the commodities, orange juice, some of the imports, exports, some of the things that we get from Florida now that they are, underwater, basically. We'll have to see how that inputs into this whole equation.
We lived on MacDill Air Force Base in Tampa many years ago, but we were there for 2 years. And if this hurricane had come through when we were there, we would have been flooded, because right across the street from our house was Hillsborough Bay, and it was maybe 10 feet below us.
Right. It was very, very close.
Yeah.
That was fun, though. We could catch the horseshoe crabs back then.
Yeah.
I was just a little tyke at the time. Okay, so next up, let's look at utilities, because this is the other one that has a 50 above its 200. And as I said, I think all of you are pretty familiar right now that utilities have just been a terrible place to be. We are seeing a possible bounce here without having to test this support level, and that is encouraging. But until I see this declining trend really broken in a significant way, I'm not going to be too excited about utilities. And here's part of the reason is when we look under the surface here, not a lot going well for utilities. We do still have that Golden Cross Index. It's actually higher than what we have for energy. But again, you can see that margin that was put between the 50 and 200-day EMAs, and that is what's going to cause this to stay above that 70% threshold we usually look for as far as a bullish configuration. silver cross in the tank right now. No stocks above their 20, only 3.5 above their 50. This is a sector in decline. And yes, if we see the reversal, I think this will get some play. But overall, stochastics looking ugly. There's not a whole lot on this chart that makes me too excited about utilities, but it is, one of those defensive areas to consider. All right. The next one I'm going to go ahead and look at is going to be, let's see, we were talking energy, utilities, real estate. So real estate has also been beat down very terribly. It is bottoming, but you can see no support level even visible on this 1-year chart. So you kind of do have to go to the weekly chart if we're going to look at the price action here. And you can see, let me get my crosshairs here, the levels of support broken. This level to me was critical for real estate to hold, and it did not. It dropped. Everything is having a good day, but I am still really not a fan of the real estate sector. You can see that the weekly chart is just, it couldn't be much worse, but this is the problem area here. Now, currently, if we do bounce here, that does line up here with these 2020 tops back here. So that certainly is a support level that's available, but I have to say, can't get too excited about real estate right now. Technology also looking quite interesting, I would say. It's holding this support level, which is a good sign. But as you saw the Apple chart, we looked at some of those other technology stocks, right, Dad? And I didn't see anything that looked that great. PMO is still technically declining. And again, look at the participation under the surface. We only have 20% that have a 50 above their 200. This is not a good look for XLK, but this is an area obviously that we're going to want to keep an eye on if this does turn into a bear market rally, which, we've been waiting for it for a while, Dan. I know, people think of us as perma bears, but, the indicators that you were showing were just so oversold. And, we've been waiting for this rally, as I think most of the market has. And, I don't know. I think this area would be a good area if we're going to get that rally, but we need to watch that Apple stock, obviously, that Apple chart, and that's going to give us a really good barometer on what to expect out of the technology sector. Financials looking interesting as well, and then I want to cover healthcare and materials, but you can see financials holding their support level easily, really consolidated, whereas the market really trended lower. I think that's a good sign. The PMO does look like it's going to turn up here, but like technology, under the surface, it is very, very, very weak. And these numbers are not going to improve as quickly as some of the other numbers, because look at how far price is below those 20 and 50-day EMAs. It's going to take a lot for the stocks within the financial sector to start to really shine, or at least for us to see that sector overall getting healthy. But I think that for financials, I think the fact we're consolidating here instead of going straight down as we saw on the utilities chart, on the technology chart, I think this is definitely encouraging, as we often like to say. Materials, of course, we've been expecting silver and gold to start making their move to the upside. I've got to show you the gold miners chart. I'm very excited about it. You can see the gap has now been filled, and that usually means you're going to see a continuation to the upside. Materials are starting to look, I think, very interesting. Under the hood, still looking not so healthy. And you can see with 0% above their 20 and 50. But again, we can't dismiss this sector like some of these others with these configurations, because it's going to take a long time. It's going to take a couple of days of rally at least before we start seeing improvement on these particular indicators where price gets above the 20 and 50. So a lot of this is
point that those indicators, most of them are end of day update indicators. So we should see an uptick on the stocks above their 20 to EMA today at the close.
Yes.
So I would, yeah, those some.
Yes, exactly. So we have been talking all these numbers, and you're right, I should have reiterated that, but these all update after the close. So we won't know the which one is the best until afterward. And then the other one is healthcare. This is one I've been watching very closely because it is bottoming long before hitting its support level here. I would love to see for healthcare to get above this level of resistance at this low, but so far not seeing it. But you can see under the surface on Friday, it still had a little bit of a heartbeat going on, but stochastics turning down below the negative level here. They are oversold, but seeing them turning down isn't that great. But you can see this sector has been really one of the few that's consistently been outperforming, which brings up the lesson of relative strength. So if you didn't see the price chart and you saw relative strength against the SPY doing this, your first thought would be, excellent, I need to get in this. It's an outperformer. Price should be rising. Well, look at what price did during that same period of time where relative strength was rising. It was on a decline. It was certainly not a place you wanted to be. And this is because obviously we're in a bear market. So always take with a grain of salt your relative strength lines. I think they're helpful in telling you, where that strength may lie. You can certainly think that, well, this is still better because it went down a little less quickly. But overall, just really take the relative strength lines with a grain of salt while you're in a bear market. All right, I'm going to look at gold miners and then we'll hop into some of those symbol requests. But gold miners, to me, that's where my eye is currently. I don't own any gold miners, but they're certainly on my radar right now. And this is why. So the only thing that's really kept me from hopping back into these guys is the fact that we hadn't seen a breakout above the declining trend. I don't know about you, but I've gotten into gold miners at least 3 times over the past 3 months because we kept having these wonderful rallies. Everything was starting to look good under the surface. And then then it failed. Gold was under pressure. And if the market's under pressure, these guys don't do very well. But starting to see some movement. And if the market is going to move up and materials are starting to look good, GDX is definitely going to have the wind at its back. So I'm liking it a lot. We don't have the breakout above the 50, but we have a new PMO buy signal. We have the RSI now getting back into positive territory. And look at the extreme, very quick improvement under the surface for price above their 20 and 50. It's going to be a while before we see this number get above 0%, just because, like I said, the 200-day is very far away on the sector or in the industry group chart. So more than likely, as far as those members of the industry group, we're going to end up seeing a little bit more time taken before this starts to improve. But look at stochastics. I mean, everything on this chart for me is going the right way. You even can see a slight positive divergence on that OBV with price bottom. So this one's set up about as well as it could be set up right now. Whether we get the follow through, I think a lot will depend on whether the market decides to follow through as well. So that is my coverage of the sectors. I did want to show the coal chart. I promised that, and then I will get into those symbol requests. I promise. But I think you're going to want to see coal. So this is the industry summary on StockCharts. It's an absolute. If I didn't have this page, I don't know what I'd do. This is excellent. So you get the sector, and you can go through each of the different industry groups, and you can see oil equipment services having a great day. All of these energy industry groups, obviously our energy is leading right now, but you can see with oil moving upward, it is helping the 4 that are really tied to the crude oil and gasoline industries. But check out coal. Coal has hit the 200-day EMA, and I'd been watching it very closely. I talked to my Diamond members about it last week, and you can see that we are getting that breakout now above the 20 and 50, which is really a confirmation that this rally, I think, is going to lead into something a little bigger. PMO doesn't have that buy signal yet, but honestly, I like to see that when we're getting really close, but haven't had it because that gets us in a little bit earlier. And stochastic's looking fantastic. So might want to take a look at coal if you have some of your favorite stocks. I do have to say I've been through most of those stocks within the coal industry, and there are a lot that don't look as good as this chart. So definitely make sure you look at those charts. If you're going to get into one of those coal stocks, definitely want to make sure it's one of the outperformers in the group, against the group, I should say. All right, so that was that. And we can get into these symbol requests. I am having a little bit of, I'm not going to be able to necessarily share the 5-minute chart for you side by side right now as I try and figure out exactly how to make my screen work just the right way. But the daily charts, and we can certainly flip to the 5-minute if it looks like we need to, and look at some of those weekly charts in the same manner. So what are we starting off with, Dad? Any comments about what I just said too? I want to make sure we're thinking along the same lines.
No, I do have a couple of questions here that I thought I'd hit before we hit the symbols. But question, why are some of your pale mustard yellow bordered and some are blue bordered charts like SPY? Well, the light blue is anything related to the S&P 500. And the mustard color is basically other.
Yeah.
Basically, we use about 6 or 8 colors for the major indexes. We're not into that so much anymore, but this goes back to the original DecisionPoint website. And it allows us to, when you're clicking through advanced decline line charts, we have them for all the different indexes. And as you're clicking through, you can tell which one you're on by the color. So you don't have to be looking to identify the index, et cetera. We have others, but we don't use them that much anymore. But if you get into those on StockCharts.com, if you get into the different groupings that we have, you'll see that there are a lot of different colors. Okay.
Yes.
And then, okay, what's the indicator that would be the most telling about any possible turnaround? I'm not sure. I think the best one that I would look at, I think it would give us a good indication, would be the Silver Cross Index. And have you got that one?
Yep.
Yeah. So that's going to give us an indication that's just better, more than just a one-day pop or fail, So that's the one we've been looking at. But of course, we look at our group of charts, and we think that's the best way to go. But here, these are other charts that we will be looking, help us find that bottom.
Exactly. And one of the things in the shorter term that I think we've both found very interesting is the fact that these intermediate term indicators have actually been an excellent confirmation tool before we start hopping into some of these bear market rallies. We'll get the signs on the short-term Swenlin trading oscillators, but then we usually get that confirmation a day or two later on these intermediate term indicators. And they've been very helpful in the shorter term as far as, is this really a good thing? And you can see that a lot of times we get those short-term indicators will turn, but as soon as we start to see these ITBM, ITVM turn, it seems to be really confirming when we're getting ready to move into something better.
Yeah.
So I'd say short term, that would be the other one that we'll watch. And finally, I did write an article on the new highs, new lows chart. And this is one that really ended up calling the end of the 2020 bear market as far as new highs, new lows. I'm sorry, I don't have the chart for that. But when we started to see these positive divergences happening on the new lows chart, on the new highs, new lows chart, and you started to see those positive divergences with the new lows, that really did mark it marked the end of the 2020 bear market. The problem we're finding right now is that we are getting these positive divergences, but they aren't really leading into the end of this bear market.
Nothing long term. Yeah.
Yeah. So that's been kind of the problem here with those new highs, new lows. But like I said, if you get chart watchers, I know that they sent the link to that article. It's pretty timely and it makes a lot of sense right now. But NYSE also showing the positive divergence here. And so that's another sign to us that we should be seeing this bear market rally like anytime now. So there you have it.
Okay.
Any other questions?
Let's try symbol LPLA.
Okay. Not familiar with that one. LPL. Okay. All right. Traveling obviously in a trading range, it's been sort of holding this support level. I'd say it's kind of developing a new support level here. Sideways movement, double top-ish. I mean, it's holding the support level, but we don't have a PMO rising, which brings me to the point, if anybody's new and watching this program here today, I do not buy anything with a PMO that isn't turned upward. I can't think of, I really can't think of a time where I have. So the PMO, MACD, PPO, whatever it is you use, momentum, you are setting yourself up for the best possible outcome, in my opinion, when you have rising momentum. If the momentum isn't rising, you're really putting yourself in a tricky, risky situation. And that's really what's going on here. I'm going to add the thumbnail just so we can look at it a bit more closely. But yes, so that bothers me right away, that there's no PMO rising here. I do like that it is finding some support here right around that 50, right around these levels of support. Stochastic's not looking very good, though. Relative strength wise, it's doing pretty well against the SPY here. This is the stock against the SPY. This is the stock against its industry group. And this is the industry group against the SPY. So you're at least doing one of the right things, which is finding an industry group that's got relative strength. But overall, like I said, you can see right here, we finally were seeing some outperformance, but really what has price been doing but moving sideways? I don't see a lot of upside potential here, to be honest. And with the PMO falling, I wouldn't be interested. If we're talking about whether you hold or sell, I would be holding it for sure, as long as it can hold this level of support down here. So,
Okay.
I'd want to stop at least at 213.
We need to slam through some here.
Okay.
CNC.
I'm going to take off my sweater here as we get serious. Very much like the way it is, price is hooking around. Yes, the PMO is, I think, technically falling, but I would give this one a C+ for the PMO. I think that I would consider a possible investment with a PMO configured this way, as it is just getting ready to turn up. I like that it's turning up below, above this level of support. I think that's positive. There's still a lot of downside pressure here based on the EMA configurations. We do have outperformance of the group, but not really that much as far as the stock. So to me, maybe there are better choices out there in healthcare providers, just because it's just not performing very well against its group, nor the SPY. And of course, right now, performing in line with the S&P is not what you want. So I do like the hook here. I think that it does have some potential, upside potential, but if that PMO does not start rising and we don't get stochastics out of oversold territory, I would hesitate to hold on to it. But I think this is a pretty encouraging little rounded bottom there.
Okay, Beyond, BYND.
Yeah. I think this one needs a weekly chart, but just looking at performance without looking at price or anything else, I'm not a fan of this particular stock. PMO trying to turn up, RSI is oversold and sort of rising. I think what's important to look at honestly on this one is a weekly, and it is continuing to make all-time lows, not new 52-week lows, all-time lows. It's not even established support yet. As it continues down, it's lost this support level. PMO, weekly PMO looks terrible. I have to say I don't like this one, but I also wouldn't be shorting it because it's still trying to find its bottom. So sorry, not a fan there at all of Beyond Meat. Kind of don't like to eat it either, but
Okay, you're right. SLV, silver.
Yes. This one, full disclosure, I own, so I'm pretty excited to see this chart. Very excited. I hadn't seen it this morning yet, so that's nice. Double bottom going on here. PMO is turned up. I don't know that it's above the signal line that it's turned up. Yeah, it did it above the signal line. I was liking how materials were shaping up. Gold wasn't doing what I wanted, but silver was looking, looking pretty good. So I did bring this to the table to my DecisionPoint Diamond subscribers last week. So I hope some of them are also enjoying today's nice 8% move. I still like silver. I don't think it's too late for silver. The gap up does make us, it is a little risky that we might get an island and a gap down. But honestly, I mean, I own it. I'm going to hold it. I don't see any reason why I would not want to. Overhead resistance is arriving, so I'll be very curious to see how it handles this price resistance and the 200-day EMA. But right now, I like silver. I know you like to always look at those weekly charts. We'll take a quick peek, and really nice constructive bottoming formation going on here along this support level from 2018. So I think this is looking pretty good here. And with the materials sector starting to make a move, gold miners looking good. I imagine the silver miners looking good too.
Okay.
Oh, look at that PMO. Look at the weekly PMO.
Right.
We're just now getting that crossover buy. So gotta like it.
Okay, MU.
Micron. Haven't looked at this chart in forever. Really nice bottoming formation here. Don't mistake this volume, the average daily volume line for support. It is not. This is a new support level. I love the way the PMO is acting. I like RSI rising. It's still negative, so there's some risk. It hasn't been performing well, but against its group, it's certainly outperforming. So if you're going to go into this semiconductor space, I have to say that this one looks like a better one than some of the others. But I think this is looking really good as a bottom. I would just be very careful because until we know that this rally is going to take hold, I think you have a lot more risk involved in technology.
Okay, ERX.
ERX. We're looking at an ETF. This is the bull shares 2-time. So first of all, this is a juiced ETF because it is a 2 times. You'll find most ETFs that are, market related like this, the bull or the bear ones are typically juiced. So be very careful when you get involved in these. I personally would prefer, if I'm on the bull side, I generally am not going to come over here to a chart like this because I don't like the risk factor. But let's just pretend it's not juiced. And what I would say that if you do get into these juiced ETFs, like a 2 times, consider I'm looking at a regular stock, how much will I invest in it, and then cut that in half because that will take away some of that extra risk involved in getting involved in one of these. But of course, if you're looking at it, you probably have a pretty big risk appetite to begin with. But, I looked at the energy chart. I like what's going on there. I'll be very curious to see how it starts to perform under the hood. But since I like the energy sector, I mean, why wouldn't I like the ETF 2 times? But just my caveat is it's juiced. Be careful. But yes, I like energy, and we can look at that weekly very quickly, and that's kind of hard to see. Yeah, it is double toppy on the weekly chart. So just be, but I'd say overall, I like the sector. And so consequently, I would say I like the ETF.
Okay, MLCO.
Melco. So in the gambling sector, I like this breakout. I can say that right off the bat. You can see this was very strong overhead resistance. We got that breakout. The next challenge is going to be the 200-day EMA. But given the way these indicators are set up, I have to say, I mean, I like this. The PMO looks on the overbought side, but we can see that it tends to get down in that 7 to 10 range, possibly, not necessarily always, but that I think leaves us some room on the top here for the PMO to get even higher. But stochastics, everything looking good here. Let me do a quick 5-minute just so people can see. So when you're timing your entries, look for those 5-minute PMO crossovers and positive RSI. That's typically when you're going to want to get in. And in this case, the buy point would have been down here. Right now, no buy point, PMO in decline. Like I said, a PMO in decline, there's really no point in getting involved in it because more than likely it's going to continue lower. I'd be watching this level and possibly an entry right here at about 685.
Okay, Fox A.
Comm services. Not liking this. Filled black candle. Both of those are negative or bearish candlesticks. PMO not looking good. Stochastics. Yes, it's an outperformer in its group, but it's performing in line with the S&P and has been since April. That's not a stock I'm going to want to be involved in if it's going to be that tied to the S&P. So I have to say, just out the gate, I'm really not a fan of this one. If you had it, you held it too long. But I would say that if you can, you'd set your stop here. But if you've ridden it down this far, I'd be watching if you can eke out a little more rally to get rid of it. I'm not a real fan of this one.
Have you done PFIX yet today?
We haven't. Full disclosure, I do own this one. We're picking up a few of them that I own today. All right. So I like the rising trend. We've already talked about the fact we believe interest rates are going to continue rising. Bonds are going to continue moving lower. And this chart, in my opinion, tells me that that is the case. It is down by quite a bit. That's going to take some of my profit away from my SLV position. But you can see RSI is still positive. PMO is still technically rising. Stochastics are, they're weakening a little, but they don't look that bad. I know that for me, I was contemplating getting rid of it, honestly, on the filled black candlestick day, and then I held out and I was happy it moved higher. It's still now on the radar because this is the support level. So I'm probably going to get in there and set my stop a little bit more at 64. Yeah, there's a good chance I'll get stopped out, but I think that it will continue a bit lower because interest rates and yields have gotten so high. And then I'd re-enter on a move off the 20-day EMA, which I think we're going to get. So I do like it. Obviously,
Okay.
I still have it.
Fred says UNG is getting hammered today.
Oh, I think we talked about this one last week. Wow, look at that. We do, when you say hammer though, Fred, we are sort of getting a hammer candlestick, which is a long tail. And, it looks like a hammer with the trading space at the top of there. Yeah, not a good chart. It was already looking weak as the 200-day was breached. Double top, I'm sure if we look at this on the weekly chart, not looking very healthy. Look at this double top, Dan. And the PMO. Yeah, weekly PMO and decline. This one looks like it's gonna.
It's an energy stock and winter's coming. So
that is true.
I would have some hope for that. Hi, Erin, what do you think about CCJ and the uranium ETFs for the cold?
Okay. Right. So materials, like I said, I think are starting to look very, very interesting. So we can look at Cameco and then we'll look at the URA chart for uranium. I like the way this is starting to really make the move. I mean, today's move is very good because we have that break above the 20-day EMA. We have a V bottom. V bottoms, you're looking for a retracement of about 1/3, which we now have. And then you should expect a move not only to the left side of the V, but past that. So I'm looking at this area of overhead resistance. PMO, let me just get a quick thumbnail. We do get to go over about 2 minutes or a minute because we started late. PMO is trying to turn up. I mean, I think this chart looks really good. Stochastics were trying to tip over and they're starting to move back up. And uranium, the only thing I would say is we just have to be careful about possible reverse flags. And this one looks a little bit more susceptible to that. We don't have the breakout here above the 20 like we did on CCJ. Stochastics looking a little less interesting. I have to say I'm not liking this uranium chart that much, but Cameco I thought looked pretty darn good.
Let me say, uranium doesn't seem like a commodity that would respond to changing seasons. It's just too far to get it into the, into the
right.
production. Yeah. Okay, let's take a look at SHOP and VIPS is for longs.
All right, we've got about a minute or two, so I'll do that.
A little over 2 minutes.
Yep. Okay. So lost support, making new 52-week lows. Yes, it is having a good day, but everything else on this chart is very negative. I would not be looking at Shopify as a possibility. I think even Micron looked better than this. I would not be involved in this one on a long. Sorry, guys. And VIPS, this is discretionary. Yes, it's having a rally. Same sort of deal. The better part of this one is it's not making new 252-week lows. So I certainly like it better for that reason. But there's just the chart's not gelling. RSI is negative. Stochastics are not making a move, and they're very sensitive. That's why I keep them on the chart, and they're not really suggesting anything going on here either. So sorry, the last two symbols I'm not really thrilled with, but I think we looked at some really great ones. Oh, double top here too. So a lot of things I'm not liking on this chart.
Just 1 minute to go. So what fresh money buys are you making now?
Like I said, right now for me, I'm looking at gold miners. I think that that's a place that looks really interesting. I think there's a lot of upside potential there. So that would be an area. I do like healthcare right now. I know that seems a little counterintuitive, especially if you look at an RRG, but I like healthcare right now. There are a couple of good industry groups. And like I said, coal looks really interesting to me right now. I think that, I know the one that's been coming up on my scans would be MET-C. And you can see that I think I talked about coal to my diamond subscribers on Friday. So certainly looking good with the PMO crossover. I also suggested a few others to my members, but I can't do that for you here in a free trading room. So if you want more information on DecisionPoint, I think you should go and check out our website at DecisionPoint.com. We do 2 market letters. It's going to be great for you. And I know if there are any subscribers, they've probably already been chatting us up. So thank you for that. All right, I'm going to stop my share and we can say our goodbyes. Thank you all for joining us in the DecisionPoint trading room. Hope you have a really great trading week. And with that, we will sign off. Look for us next week. And if you want to join us live, go to our homepage and you'll see a registration link. Good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.